Hello everyone, Bill Meridian speaking to you again from the United States. This is a mundane, but it's an economic slash financial presentation. Planetary Economic Forecasting 2025. And by the way, we have the old website is still there, billmeridian.com, too large to transfer to some other system, so we set up a second one on GoDaddy at billmeridianastrology.com. Please visit both. I published this book, I think it was around 90 or 92, Planetary Economic Forecasting. This is the second edition. It is a 200-year study of business activity in the United States. Let me explain. The data. The database was originally created by Ameritrust Bank from 1780. The Business Activity Index, as they call it, was pieced together from any bit of economic data they could find. At some long stretch of time, it was pig iron prices because iron was needed in industrial production, so they took any data they could find, they normalized it, strung it all together to create this index of business activity, which is an oscillator. It goes around a zero line, up and down, way down in the 30s during the Depression, way up in the 90s. In recent years, it is updated with the FRB Index of Industrial Activity, which is published monthly. The company was taken over, I think, in 1988, and of course the first thing you do is you fire everybody who does constructive, interesting work like this and replace them with bean counters. So I maintain the data myself from that time up to the current day, and that is the basis for the book. Now, 6 planets or planetary cycles were determined to have the strongest effect. Jupiter through the signs was number 1. It was more than 50% of the entire weighting. Neptune node was 2, Pluto node was 3, Saturn Pluto was 4, Saturn through the signs was 5, and Saturn Neptune 6. Now, how was this done? It was done by measuring, for example, when Jupiter hits 0 Aries, 12 years later it completes its cycle. So that's a 12-year cycle. So, for example, Saturn through the signs, as you could guess, is 28, 29 years. Saturn Neptune is 36 years. So there is no cycle in this index which is less than 12 years and none that is greater than 36 years. And the percentage change was measured as, for example, Jupiter hits 0 Aries, it goes to Taurus, it goes to Gemini, or, for example, Saturn Pluto from conjunction to semi-sextile, to the sextile, to the opposition. Saturn through the signs, same as Jupiter through the signs. Saturn Neptune is the same as Saturn Pluto. Why these planets? That's not the purpose of my book or this presentation, but Jupiter through the signs, Jupiter is expansion. So when Jupiter is in certain signs, people are more inclined to take risks and to expand business. Now, Neptune node, Pluto node. From my studies, the node has to do with needs. And for example, in the Uranian system of astrology, node and the world point would be someone who's a broker, someone who takes the world is 0 Aries, their needs, the node, and fulfills them. So I think that's why these two show up here. Saturn, Pluto, that's got to do with liquidation. It's got to do with getting rid of excess debt, excess employees. I think you all know that from your own horoscopes. Well, Saturn through the signs, Saturn obviously is the opposite side of Jupiter, so it's not too surprising that Jupiter would show expansion, Saturn contraction. And why Saturn Neptune? Because that's a debt cycle. Neptune has to do with inflating the currency. And borrowed money is parceled out or marketed by the interest rate. If you want to borrow money, you've got to pay a certain interest rate. If rates are low, people are more inclined to borrow money. If they're high, they're less inclined. So Saturn Neptune tends to lead people to see things as they actually are. And if an enterprise isn't making money, they're likely to liquidate it. It's got to do with people's preference for borrowing money and investing it. At certain points in the cycle, they'll do that gladly. At other points, you can't give the money away. So those are the 6 cycles, and here is the original composite. Sorry for the fuzzy graph, but this is an old DOS program. This was back in the days of steam-powered computers. And at the top you see 6-cycle composite 2000 to 2020. And there you see the actual index itself. From 100 means all the cycles sort of net out to 0. And you can see 1025, a sharp drop down to about 91, and then a move up. And this was published way back in about 2003 or so. And you can see the peak there, that was the real estate bust. You remember 2007, 2008? That real estate bust was created by several things. Number one was the peak in the cycle. Number two, there's almost never been a year ending in a 7, which is the decennial pattern of the year, in which we have not had some sort of a financial crisis. And number three, Saturn, Neptune, at that point in their synodic cycle, indicated people didn't want to take on any more debt. It's like, I have enough brown-colored suits or black suits, or I have enough vanilla ice cream, I don't want any more. Same thing applies to borrowing money. So that's why that 07, 08 bust was so bad. It was a year ending in a 7, and you were at that point in the Saturn-Neptune cycle where people do not want to borrow money, and that is the lifeblood of the real estate industry. So then it crashed, and I was asked, young man, all well and good, this was by one of those old white-haired gents at a meeting in London, but why would it stay flat for that whole time period? You see that right after, that's about 2008 or 9 right in here through 2010, all the way out to 2016. And I said, well, thinking on my feet, they will probably elect someone president in the United States who is not friendly to business. And that's why we will get a period of stagnation, which turned out to be correct. And in 2016, of course, they booted that administration. They chose a more pro-business administration led by Donald Trump. And so you had the 2016 boom. Now, 2016 is also notable because there is an 18.6-year real estate cycle. And it consists of 4 years of great difficulty, which I think was in here, then about 7 years of recovery. And after 7 years of recovery, people feel it's safe to go back in the water again, if you know what I mean. And so they jump back in and you get a 7-year acceleration. And I think that started around 2016, so, or maybe a little later. The name of the book is The Secret Life of Real Estate and Banking, which is a very good read, which will explain the entire cycle to you. So I'm overlaying that on this cycle. So I've upgraded this recently. There's the 2024 projection. And as you can see, it was not a positive one. So let's move on to 2025. And here you see the bottom in that cycle was June 30th of this year. And right now, right now as I'm talking to you, S&P earnings, the aggregate earnings are coming in 14% above where they were last year, which is a nice healthy number. I don't think that's going to slow down. And economic activity is picking up depending on what statistics you look at. So I think we're at a low. And by the way, there's never been a year ending in a 5 that, well, there was one year that was flat, but years ending in 5 have the greatest bullish effect on the stock market. So I think we're okay here, 2025, 26 into 27, when we'll probably get some sort of a crisis. And of course, years ending in 0, 2030, are the worst years for the stock market, which reflects this economic curve. So this is where it stands right now. Right now, as I'm talking, we are here in October, and I shall be updating this 2026 through 2030, and that will be the subject of a very quick update before the end of the year. I have to update these numbers before 2026 starts, so I'll be reposting here and bringing you up to date. And as always, you can get the mundane book, Mastering Geopolitical Prediction, the old Predictive Power of Eclipse Pass in search, and the book I'm referring to right here, I'm referring to Planetary Economic Forecasting, still for sale. Bill Meridian Thanks for listening. Talk to you again soon.